The S&P 500's green, Nasdaq's green, Dow is green, and Tesla is barely sitting green here. We're going to go over why this level I have in red from 245 to 240 is so important today. We're going to talk about the on-balance volume, which is basically showing now, finally, that we're starting to get some bullish volume into the stock. We're going to talk about the potential bearish divergence that's in play, and ultimately what would have to happen in order to see Tesla back down at 220 and 210. My name is Peter DiCarlo. I've been a full-time trader for the past 8 years. I run a trading community with over 12,000 members in our Discord community. The link is free and it's below in the description. And I'm over there every single day hanging out with myself and all of our advanced traders, giving away all of our trading resources completely for free in efforts to make trading and investing simple and effective for you guys. Now, the past couple of weeks, Tesla obviously has not been performing well. Overall, for the past year, especially since lows back in January, we're doing more than fine. But in the past couple of weeks, we've been able to push this higher high up over 300. From there, we have pulled back down to about 215, bouncing, and now we're testing this important level once again of 245 down to 240. Now, my goal with these videos is not to sit here with imposter syndrome and to make things extremely overcomplicated for you. My point is to make things as simple as humanly possible so that you can leave here quickly but have a deep and better understanding of what everything actually means. One of the most important things when it comes to trading, and even if you're an investor and you're watching key levels, because I play two hats here. I play the trader every day, but I also play the long-term investor. Both of those people are waiting for the same thing, which is a break of $240. Because once we break $240, the long-term investor in me is going to switch on my long-term shares, start to sell, potentially covered calls or go with puts, and I'm going to start hedging out my positions. The trader in me is also waiting for this break for the potential move back down to 216 to fill this gap from all the way back in August. So the trader and the investor in me are both looking for the same exact thing. The biggest question at this moment is going to be, when is this going to happen and what am I going to do in the meantime? So the first thing that we're going to look at is just price action and a pattern. Everybody looks at patterns like they're the most ridiculous thing that's ever happened and that it's all constellation or crystal balls. And the truth is, none of that's really the case. If you're somebody who understands technical analysis, you know that we don't believe that specific patterns are going to play out and that because a pattern is there, that ultimately it has to work in our favor. The reason that these patterns work is because it's basic human psychology. And so we're going to look at this head and shoulders pattern, but I want to more so explain the psychology to you when you're seeing these patterns. So the first thing we're going to look at is this head and shoulders. A head and shoulders forms first when a stock is making a high, like we had back here. It pulls all the way back down to a support level, in this case $240. So psychology is, okay, cool, we're moving up. We bounce off of that and we make a higher high. Now the psychology is we're really moving because we pulled back, we retraced, we held 240. So psychologically, the bulls held in the sand that 240 line and said we're not going below this. We pushed up, pulled back, and now we're holding again. If we were to look at most recent market psychology in the past month, we've seen that we made a high, pulled back, and made a higher high. But I would bet you that if we go to push up and test a higher high, this is not going to be a higher one. And the reason for that is simple. A higher high would psychologically have to dictate that overall retail sentiment and all market participants are bullish. If you look around at even your everyday individual, baristas, bartenders, etc., not many people are extremely bullish on the economy. Even if you look at institutional investors, it seems like this big but the greed that we've been seeing in the past 6 months to 12 months really is starting to slow down. But I do believe that looking at this level, since we've held it here multiple times before, that we will probably end up bouncing off of this level. And I do believe that we will probably take another move back up to potentially 255 or max $260. This is normally where the head and shoulders plays out because we have this shoulder here, we have this head up here in the middle, but then on the third potential move up, we actually don't take out this higher high. Instead, we usually match the left shoulder level And that's where the head and shoulders moves in. And so personally, what I believe will probably happen is we will see Tesla in the next week or so bounce back up to 255, probably back up to 260, since this is where all of the volume is held right here at 260. And we'll talk about the importance of that in a moment. But it's looking like probably the move to 260 is going to occur. I think from there, we'll reject off of 260, come back to test 240. And if we break 240, that's where the big move back down to 216 will occur. And that is ultimately, I believe, where we will end up filling this gap back down here. Now, like I said before, as a long-term investor and as a trader, I have to wear multiple hats because the trend is still up. We're still in a massive uptrend. Even in the past 6 months, we're still trending up. So at this moment, I'm continuing to play what's in front of me until key levels are broken. Now, I have been spending a lot of time over the past couple of days putting together a hedging PDF and also putting together a risk assessment and risk profile PDF, which I plan to do live streams with you guys throughout the next week or so, and also make a video that's going to accompany alongside of it. At the end of the day, we'll go through the S&P 500, we'll come back and look at Twitter, and if you guys want market updates in real time for free, go follow me on Twitter, the link is in the description, and check out our Discord community, which is also free. Thank you guys for all the support. Remember to use proper risk management. Remember that time in the market is the single most important thing. Buying yourself freedom, buying yourself a breather will not only allow you to use your creative expression in this world in a better way to make more money and to live a more fulfilled life, but the more important aspect to all of this is that it's going to allow you to actually think critically and buy yourself some time to build a life that you really want, which is something that we don't talk a lot about on this channel because we're usually wrapped up in the day-to-day technical analysis. I hope this video helped, guys. Thanks for all the support. I'll see you next time.